I'm Martin Fridson, the editor of High Yield Future Tense, Cracking the Code of Speculative Debt, published by the New York Society of Security Analysts. This is a book that brings together the very best minds in research in the high yield bond area and looks out ahead into what the market is going to look like in the years to come. High Yield Future Tense is divided into 4 sections with 18 chapters and 30 authors. The first is Market Dynamics, and this features a chapter by Michael Lewitt on the boom and bust cycle in the high yield market. And he talks about the next bust that's coming and some of the factors that will contribute to that. Another chapter is by Bo Becker from the Stockholm School of Economics. He focuses particularly on the borderline between investment grade and speculative grade debt and the impact there of reaching for yield. Becker is able to show the specific impact of the rating guidelines and their effect on the investor actions. Also in the section on market dynamics, we have a contribution by 3 German academics, Christian Andres, Andre Betzer, and Peter Limbach. And they talk about the certification effect of the leading underwriters. These academics find that, in fact, the deals underwritten by the top 3 underwriters in the high yield market are more likely to be downgraded or to default after they're issued than deals underwritten by other firms. And furthermore, there's actually a yield premium recognizing that the risk of those deals is actually greater than others in the market. We have a very interesting contribution by Steve Miller of Leverage Commentary and Data, and he talks about 2 developments that are greatly affecting the evolution of the leverage loan market. The first is the new regulations that have been imposed by the Office of the Comptroller of the Currency following the global financial crisis, and the other is the growing influence of investors who have historically been involved in the high yield bond market and are now becoming more important in the loan market. In the second section of the book called Active Management, we have a contribution by Jason Thomas of the Carlyle Group, and he talks about very familiar subject in the high yield market, the spread versus treasuries. But what Jason focuses on is that there's another component called the credit risk premium, which is the extra yield that investors have to be paid to induce them to invest in bonds with default risk. And we think this is a real contribution to understanding of how the high yield market works. We also have a contribution from Tai-Wei Zhang and Weihua Wu from Mingchuan University in Taipei. They find that contrary to what people generally believe is that rather than the high yield market leading stocks, they actually find the stock market leading the returns in high yield. The third section of the book is called Analytical Innovation. And here we have a contribution by Michael Palladino and several of his colleagues from Fitch Ratings. And he talks here about the state of the art in estimating recoveries on high yield bonds. And they talk not only about the factors that go into the analysis by which they estimate recoveries, but also potential changes in the landscape, including a potential change in the bankruptcy code, which they believe could lead to significant transfer of wealth to the junior creditors. So again, changing the expectations on what your recoveries would be at the various levels of seniority. The final section of the book is on benchmarking, and this relates to indexes and some of the challenges that are involved in using benchmarks to measure performance of high yield managers. And a contribution here by Claudio Ferrarese, Peter Kahn, and David Buckle of Fidelity Worldwide talks about a very interesting idea of applying smart beta, which is now a well-established methodology in the equity markets, to the high yield market. So it's a new and very interesting way for investors to think about the process of risk management and to the allocation of the assets within the portfolio.